The stock market is on the move again, with futures pointing to a positive start for the Dow, S&P 500, and Nasdaq. But here's where it gets controversial. Investors are caught between hope for rate cuts and anxiety over a sluggish economy. Early Monday, futures for the Dow Jones Industrial Average and S&P 500 were both up by 0.2%, while Nasdaq 100 futures gained 0.4% in pre-market trading. This follows a disappointing Friday when all three major indexes gave back earlier gains as traders digested a weaker-than-expected jobs report for August. The U.S. economy added only 22,000 jobs last month, a far cry from the 76,500 jobs economists had anticipated. To make matters more concerning, the employment figures for June and July were revised downward by a combined 21,000 jobs. This unexpected slowdown has shifted market expectations dramatically. According to the CME's FedWatch tool, the probability of 3 interest rate cuts this year has surged to 67%, up from just 40% a week ago. Markets are now pricing in a rate cut in September, but the debate is whether the Federal Reserve will reduce rates by a quarter point or a more aggressive half point. Currently, the chance of a half-point cut stands at only 10%, but this is a key question investors are watching closely. This week's inflation data could be the deciding factor. The Producer Price Index, PPI, is scheduled for release on Wednesday, followed by the Consumer Price Index, CPI, on Thursday. These reports will provide crucial insight into inflation trends and help determine the Fed's next move. Jim Reed, a strategist at Deutsche Bank, pointed out that for the Fed to consider a half-point cut, inflation numbers would need to come in quite weak. Economists expect the core CPI to rise by 3.1% in August, holding steady from July's figure, according to FactSet data. One important aspect to watch is how tariffs are influencing prices. While the Federal Open Market Committee, FOMC, seems willing to overlook the one-time price shifts caused by tariffs, inflation data of this nature could still limit the Fed to a 25 basis point cut later this month, as noted by Pepperstone strategist Michael Brown. Meanwhile, oil prices surged about 1.5%, with Brent crude futures climbing to $66.50 per barrel early Monday. This jump came after OPEC producers agreed to increase output further during their Sunday meeting, a move that could have significant implications for energy markets and inflation. On the bond front, the yield on the 10-year Treasury edged up slightly to 4.083%, signaling cautious optimism among investors. At the same time, the U.S. dollar index dipped 0% to 97.68, reflecting subtle shifts in currency markets. So, what does all this mean for you? The tug-of-war between economic data and Fed policy is creating a highly uncertain environment. Are rate cuts the right move to stimulate growth, or could they risk overheating the economy? And how much weight should we give to inflation figures influenced by tariffs and energy prices? These are questions that could spark lively debate. What's your take? Should the Fed act boldly with a half-point cut or proceed cautiously? Share your thoughts below and join the conversation.